So moving along now, we're going to touch on the basics of trading platforms. So look, the basics trading platform that all the CFD traders generally use, the popular one is MetaTrader, MT4, MT5. So when you open your account, you get access to your MetaTrader. So the advice is that what you do is you set that MetaTrader up. You get the markets that you are looking to trade, add those onto your MetaTrader, and then also make the charts for those markets. So set the charts up with all the technical analysis, all the indicators that you want to use, and update those charts regularly, obviously with any trend lines or chart patterns, so that if the market is volatile, or some news comes out, or there's a risk event, you can look at your trading platform and you'll be able to quickly have an idea of whether or not market is breaking any sort of technical levels, chart patterns, or triggering any trades that you may be looking at. So it's about just preparing yourself with your trading platform to make sure that when markets are active and they're volatile, that you are prepared. Look, it's very simple to use. It's once you start using it, I am sure that you will be able to get your trading platform and make it the way that you need for your trade setups and way you view your markets. Now, so once that's all done, obviously you're going to move on to the mechanics of trading. Now, this is where it gets interesting, and the best bit of advice I can give you now when you start to trade is basically plan the trade and trade the plan. So basically what I mean by that is that every single time that you're looking to trade or you have a trade trigger, that trade is planned. So that you have a stop loss immediately that's in mind, so that if the market goes against you, exactly where you're going to go out, exactly where your loss is. And then you also have targets in mind, so that when a market does get up to certain levels, if you are looking to take partial profits, that you actually trade your plan and you do take those partial profits when they're there. You may also have a plan that if a market starts moving in your direction, that then you take partial profits or maybe trail your stop loss up. But the whole idea is that you are being proactive and not reactionary to the market, flying by the seat of your pants. So that when a market starts moving, whether it moves against you or moves in your direction, that you have a plan already set out to react to that market instead of basically then not knowing what to do next. So plan the trade and trade the plan. Now, the last bit of advice when you first start trading is stop losses. We just talked about stop losses just briefly then, but stop losses is something that you certainly would want to put on every single time you trade. And you want to set your stop losses. Textbooks generally tell you to set the stop losses of 2% of your capital. And the reason why they say that is so that you could get a lot of trades wrong and still stay in the game. If you're risking 10, 20, 30% of your capital on one trade, obviously you are not going to give yourself too many trades before you blow up your account. So certainly, especially when you first start, is try to keep your risk to a minimum and as close to maybe as 2% as possible for your stop losses. The other thing that a lot of novice traders do is they tend to move their stop losses when the market goes against them or take those stop losses off. If you can get into the habit early of sticking to the plan, and when a stop loss is hit, just taking that loss, I can assure you in the long run you'll be much better off and you'll stay in the game and you'll give yourself an opportunity then to become a more successful trader. So certainly make sure capital preservation when you first start out is something that is at the forefront of your trading, and literally the first thing that you're looking to do every time you put a trade on is put that stop loss on as well, and don't move.